SBA EIDL loan increase versus unsecured term loans. Which financing is best for you right now? What should you do in the future? And how to prepare for this economic state we are currently in and moving into this quote unquote impending recession. I'm going to be showing you all of that and so much more so you can finally power your business forward and continue to build, grow, expand, and even get out of a tight pinch. But before I get started, my name is Michael with Viral Funding Solutions, and I come out with content like this all across the channel, blogs, social media. We're one of the fastest growing YouTube channels out there on helping business owners of all backgrounds and industries get the right type of business financing, building business credit, credit repair, and taking advantage of different opportunities as they come. So this is the first time you're watching me. I appreciate you for being here, and if you're a returning member, as always, I greatly appreciate you as well. And you know what this is all about. I bring the heat. And today we're going to be focusing on the SBA EIDL loans versus these unsecured term loans where you do not have to offer up any collateral to get the funds that you are looking for. Now, before I get started with that, if you haven't been listening to my other content on what's happening with the SBA EIDL loan, right now it's not approving anyone, and we're not so sure of what will be happening here in the distant future as well as in the long term. There may be some statistics and numbers coming out of them trying to get and allocate these funds and what's happening with the banks, how they work with the SBA and all of this. But a lot of people are stuck in the queue, and unfortunately they haven't been processed. And there was a reserve of SBA EIDL loans funding, and now it's been a bit depleted. But this is what this video is for, to show you what this unsecured term loan option is. And just in case you're not quite sure about any of this, I'll leave information down below in the description. I've also come out with a lot of EIDL content, PPP, grants, private, non-private lenders, physical, traditional banks, online banks, and so much more. So I have other content where you're going to hear about all the SBA EIDL loan alternatives. So make sure you watch that down below. You'll hear things such as unsecured term loans, secure lines of credits, unsecured lines of credits, merchant cash advances, equipment financing, accounts receivable financing, personal/startup loans. I can be here forever talking about all of them. You can also visit the site Viral Funding Solutions. Now, let me know who is tuning in with the hashtag live in the comments. I would greatly appreciate hearing from you. And if you're watching in the replay, give me something like a hashtag replay or a hashtag team replay. Be a little creative. Give me a little funk with it. Let me see what time you're in here. And like always, I'll do my best to respond. And just be careful. If it's not me down below in the comments, there are a lot of people who like to come and spam. There are those telegrams, cardigrams, and I'm not associated with any of them, so just be careful. Now, as you know, it's hard to get the EIDL loan. It's not an easy task. Maybe you missed out on the PPP. You got it. You didn't get enough. You didn't get enough of it forgiven. Now you're in this dilemma. Well, can I get an increase? When can I get my first amount of the EIDL loan? We're looking past that today, and we're focusing on that versus the unsecured term loan again, where you don't have to put any kind of collateral and you can get approved for a certain amount. And I'm going to get into the qualifications right this second. Now, in unsecured term loan, similar to an EIDL loan where it's this capital you can use to inject into your business in a lump sum, but the EIDL loan was primarily used for COVID relief, as you know. This money was designated to people who were hit hard during the 2020 to 2021 quarters, primarily speaking. And there were some outside of that too. But that was given for those who needed to go through operational expenses, cover their debt, any other types of business expenses, make payroll, maybe hire on some more employees for the people that they lost. They have had a supply chain issue, perhaps. Partial or full shutdown of their business, government mandates. And these are some of the things that also line up with the employee retention tax credit. And if that's something you're interested in, getting up to $26,000 per employee, then I'm going to leave more information of that down below, as well as a questionnaire for you to get in touch with me if this is the first time or maybe you've been around. There'll be a questionnaire for you to fill out in less than 30 seconds, and then I will be able to evaluate, analyze, and give you a proper response back on your best funding option and options. Very thoroughly broken down, safe and secure from top to bottom, all the best funding options, and whether you qualified for them or not, I'll show you. and then a conclusion, bonus tips, bonus material. It's unlike anything you've ever seen. A lot of people are moving on it. I have a lot of people today who've been given offers, people who are saying, whoa, I didn't know this was something people do. And I told them not everybody does the way I do things as a business loan broker / agent, as your expert in this field who's been doing it time and time again. So with an unsecured term loan, what primarily you're going through a private lender. So the difference between the SBA EIDL and an unsecured term loan, government, you're going through private lenders over here with the unsecured term loan. And so when people ask me, what are the interest rates? Well, I'll get into that in a second. What are the terms? You'll hear from that in just a moment. What's most important is, does the repayment go under the benefit? And what I mean is, let me say it in another way. Does the benefit exceed your repayment? Whenever you're thinking about getting business funding, not only for COVID relief, but for growth and expansion as well, then you should be thinking to yourself, is the benefit of me taking this going to exceed my repayment? And you shouldn't look at it as just interest rates. You should look at it as, how can I get a longer term? And how can I get a lower repayment? You may not start off with the best term or perhaps the best repayment you had in mind, but we never give you an offer that you cannot handle. So if you ever get to that stage where we give you an offer, we understand your repayment ability. I do all these calculations as well as do the lenders and the underwriters, and we know how much you're able to afford. So whenever you get something and you may feel like it's a little much, just know, especially with these unsecured term loans where you don't have to offer up collateral, the lender is assuming 100% of that risk. So when that happens, they're giving you their money. It's not coming from the government. You're not offering up collateral to get it. So the lender can ensure that they can take some form of equity, liquidity, and inventory, etc., equipment, accounts receivable financing, the real estate property or properties to help you get the maximum amount of funding you're looking for. Then they're assuming they're taking 100% of that risk. And that's why there are personal guarantees involved, And this is where the lender, if you default, you close your bank account, you don't make any of those repayments, you're liable, and they can go in and assess and take those assets. It can be a car, it can be something else that's personal. And that's just how these work. Okay, so it's not a bad thing. The thing you have to understand as a business owner is, how strategic are you? That's ultimately what I'm going to jump back around. I'm going to go through these things with the unsecured term loan, but keep this in your mind as you're watching this video. Even if you're watching any other video, I'm sure they won't tell you this. You have to be strategic about how you will use your funds. Right now, it's harder to get access to them. Industries are limited because of our economic state. Price elasticity has dropped. Supply and demand, you see a lot of demand, less of a supply, so the price increases. And there's so much more of an opportunity cost out there, and you have to be understanding of what you're willing to forego. If you can't qualify through the banks, well, there are these alternative options. If you qualify for the bank, I would say to go there first. Don't waste my time and thinking that I'm going to go and apply for one of these alternative loans when in the back of your mind, I'm going to go to the bank because they can approve me. I'll usually ask you, can you get approved by the bank? And will that be your first option? Yes, I can. I'll look there first and then I'll see what's there. Or no, I can't get approved there. Let's figure out what I can do with this option. So now let me get into this unsecured term loan product. So business term loans, as they're called as well, they're usually between 1 to 2 years unsecured. And then they can be sometimes between 1 to about 10 years. And it's not an EIDL loan. This is not related to it. There's another video I came out with, the SBA 7A loan, which is an alternative to the EIDL, that I'll try to link you to down below. But don't go anywhere. You'll want to listen to this because not a lot of people will qualify for that SBA 7A. And even if you did, it doesn't make sense for you to possibly be in that amount of debt or go through all that high documentation. Perhaps you cannot apply. Perhaps you have a lien. Perhaps you have bankruptcies. And all of these things that are happening within your business that you possibly want to clear first and be in so you can finally get a higher chance of an approval. So stick with me here. This is a great product. What can you use this unsecured term loan? So I'm looking at my document and I'll go into the share screen in here in just a moment. Let me scroll up to my document here and make sure. Okay, so let me start off with, you already have an understanding of what an unsecured or a business term loan. They can be unsecured and secured. which is with collateral, or unsecured without collateral. And it is like a lump sum that you're getting that you can inject into your business however you choose to. It can go for the purchase of equipment. It doesn't always have to be equipment financing / leasing / sales leaseback you go to, although I'd recommend that route if you're getting equipment, especially at a high cost. So you're getting this amount of a lump sum from a lender, and then you're paying it back at fixed intervals with interest over a set period of time. So depending on your lender, you'll be able to pay off this within a weekly, bi-weekly, or on a monthly basis. A lot of the times they are monthly repayments. They're not these daily / weeklies like you probably heard with the cash advance products. And you may be thinking, well, I don't want a weekly. Well, you don't qualify for a monthly. And even if you qualified for a monthly, you cannot get this 1 to 2 year term loan anyways. I mean, even if you qualified for it, you won't qualify for this category, because with an unsecured term loan as well as a secured term loan, you should be showing that you're using this money for growth and expansion. So if you filled out my questionnaire, and I'm going to get into some of the details on what qualifies you for growth and expansion, but I'll say this right now. You have to demonstrate that not always necessarily the highest profitability, but at least you're moving up in that direction. Revenue, you're not fluctuating. Your average daily bank balances look good. Cash, ACH deposits, no bounce checks, not too many of them, no chargebacks. Negative days will hurt you. And I'll show you a little bit more on screen of what I'm looking for when we go through in our underwriting process. But showing that you're going to be using this funding for growth and expansion, that's the difference between that and the EIDL loan. The EIDL loan, relief, I need to cover my butt. I need to stay up afloat. And unsecured term loans, they can be a part of that. But we also want you to see, hey, are we going to be using this funding for growth and expansion? What are your projections in about 4 to 5 months from now? Are you going to be on an increase? Are you just trying to stay up afloat and clear any kind of debt? And that's your primary answer. That could be your secondary. Your primary should be, I'm going to open up a new building, or I'm going to get a new warehouse that I'm going to add a new roofing to. I'm going to hire on 10 more employees, and each one of these employees are going to produce for me an ROI within 1 to 2 years, possibly 2+ years. See what I'm getting at? Or I'm financing a big project of 100,000 and above, 150,000, and even in some cases underneath 100,000. But I'm going to have multiple projects as well, where my return on my investment will be in about 1 year to 2 years time, or 2+ years time. See the difference between a short term would have been, hey, if you qualified for just 6 months, would you get a return on your investment in 6 months? It could be at the 6-month frame. It can be before the 6 months, or it could be a little bit thereafter, but you qualify for what you qualify based on your details like revenue, time in business, credit, industry, and a bit more that I know on my back end, and I don't want to spend a lot of time on that. But unsecured term loans, 1 to 2 years primarily is the sweet spot for these, and you can classify them as hard money loans. A lot of people have the wrong context and wrong connotation with that, and each person is different. You may be able to, in a year's time, get a return on your investment where you got 125,000, and then you double that and you got 300,000. You paid back 180,000, but you just went over 200,000 in revenue, and it moved your business up. So there is nothing within, well, my interest rates is this, and what am I getting this for? That's too high. You have to think about it. Is it that you're in growth and expansion, or are you in I need to survive SBA EIDL? I got approved for this amount. I'm still waiting for them. I don't know what I should do. And you're now in this cocoon. Literally, you're sitting on your couch. And I hear this from a lot of business owners. I'm not just saying it, and I've been in your shoes. I know how hard this is. I have my own this business as well as a few others that I receive funding for. But you just sit there and you're like, maybe I'll just turn on the television, and you dilute yourself with so much entertainment, what you feel is good. So then after that, you're feeling like, oh, at least I did something. And you still feel bad because you weren't productive in it, and you're still thinking about what you need to do. So to get yourself out of that rut, it's getting education. It's getting plugged into these videos. It's going forward, not saying you're stuck in motion and never taking action with it. So to finance bigger projects, and you need more equipment, perhaps it's inventory where you're going to see a return on that investment in 1 to 2+ years time, not something in the 3 to 12 month time frame. And even if that's not the case, you only qualified for 9 months because you don't have the details. Do what you can with what you have. If you can get what you can get, and then come back and get more funding, that's what you should be doing. And then the next time you renew, you can come back. We can even increase the terms, drop the rates, get you more funding, get you maybe in a higher tier. But until then, you're going to be continuing to fight for the lowest price. So the interest rates, I'm going to be getting into that in just a second. And at any moment, if you guys have any questions, please leave them for me in the comments. I'll try to answer them as I go. If not, I'll answer them at the end. This is very pivotal. I see business owners every day that are stuck. They wish they had this information. And people go, well, it's 45 minutes long. If it is, take some time, bookmark it, come back to it, but don't complain. What you're going to get in that is much better. And this is information that I'm not charging for, that I can be in private lessons. You're getting everything here in a video. So I said what a business term loan is, how you can pay back at fixed intervals with interest over a set period of time. Depending on your lender, you'll pay it back, how I said, weekly, bi-weekly, and even in a lot of cases, monthly, not these daily/weekly, although those aren't bad. You just have to understand the structure of your business financially. And that's why it's important to understand your bookkeeping. You don't have to 100% handle it, but get in there. Repayment periods can last from a few months up to 10 years. There's the SBA EIDL, the SBA 7A. There's some hybrid products that where we can evaluate you for a line of credit that's unsecured. We can evaluate you for a cash advance and or an unsecured term loan in the meantime while you're getting approved for the SBA 7A loan product. And that's with just $120,000, generally speaking, in annual revenue. And that could change in a little bit for some higher qualifications. But that with about a 660 and above FICO and 2+ years in business, you're depositing very well, and you're not fluctuating and sitting on the fence and 1 month you're in and 1 month you're out. And then some SBA options would require you to have at least 300,000 and above in annual revenue. So continuing forward with this unsecured term loan product, the interest rates, they vary by the lender, but they can either be fixed, or variable. That meaning that if it's a fixed amount, you know it's being taken out of your account on a monthly repayment and on a monthly basis. You don't have to worry about 1 month it's 5,000 and another month it's 10,000, and then you go, well, that's going to hurt me cash flow wise. I wasn't able to get my plan together. If I was going to be taking 10,000 out, well, I would have had this first, and then this would have happened second. See, that's where you come into a scramble, where a fix usually is what you get in a lot of these cases, where you know where you're getting on a monthly repayment. And with an unsecured term loan outside of the EIDL, again, these are separate, you're usually looking at 1% to 3% interest for a 1 to 2 year time frame. So if you're asking me how much is that? So if I have 12 months is your term, it's just a year, and you were assessed to have a risk of 3%, you're going to be paying 36% interest over the 12 months. And sure, there are early payment discounts. If you want to get out of it quicker, you have to look at that too. It's not just 36%. Oh no, I can't do anything above 15%. I got to do somewhere between 3% and 5%, or 3 to 10%. Let's be realistic. Do you even qualify? And two, even if you qualify, does it make sense for you to go in that direction? There's still more. And higher documentation usually means higher scrutiny. Higher documentation usually means you have to have a great, excellent credit profile. And I don't just mean the score, the numbers, the Vantage, FICO 8s, FICO 9s. I'm talking about minimal inquiries, low credit utilization, low debt to income ratio, lower than 43%, and a bit more. FICO SPSS score to assess your business credit score. There's so much more documentation that needs to be handled, and you have to understand that if that's the direction you want to go in, then sure, you'll have somewhere between 5 to 9% or so interest, but it's more than the interest rates. You have to look at how can I get a longer term, but how can I keep my repayment low, even if my interest rate is 24%, let's say 12 months, 2% interest for that unsecured term loan, 24%. Okay. Now, if you were given 2 years, a lot of cases we go up to about 18 months, 24 is not rare, but it happens a lot with these unsecured term loans. Then you just do the numbers there. 24 by 2, and if that's 2% you get, right, that's 48% interest you're going to be paying over 24 months. Now, if you were given the 3%, that's a whole lot more interest, right? So 12 by 3, 36, and then you can do the math with 24 by 3. So you have to think about do you qualify? One, and then two, if I qualified, what do I need to have? What is the underwriting process? What do I need to know more about? So 1 to 3% interest per month. In a lot of cases, these are more of a medium to high rate. Again, because the lender is taking the risk. This isn't a government loan. There's no bank involved. There's nothing else. But the lender's taking 100% of the risk, giving you their money. And if you will default on it, this is the reason why these are medium to higher rates. You have to understand that. So some attractive points to the term loans, and we'll get onto the share screen here in a moment. Low interest rates is what's attracting to people, quote unquote low, respective to each industry. You may get 2% where somebody else gets 1% and somebody else gets 3% because of your average daily bank balances, your number of NSFs, bounced checks, you have a lien, you have bankruptcy, you have delinquencies, you have some kind of a background check that doesn't go right, you're industry specific, you're fluctuating in revenue, cash flow, your credit, something with it that we didn't like, that we could have given you a 2%, but we had to give you a 3%. And then we can readjust over time. Think about that. So due to their longer durations, business term loans are typically available at lower rates than short-term business loans in a similar sense. Depends on how we're looking at it, and I'll get into that in a moment. Cash flow flexibility. Term loans allow you to free up your cash flow, especially if you're paying it back like the way you would want to on a monthly repayment, but it's not the same for everyone. And you may just be needing $40,000 in funding. You're thinking, I want a year to 2 years, but you only have a 640 FICO with just barely 2 years in business. Well, we can try to work it out, but it won't. You won't get a year. You'll probably get 7 to 8 months, maybe 6 months. So you have to ask yourself, what would be my short-term return on that investment? And if I'm going into the longer term, what do I have to do to get there? So you take so much that you can only chew. Don't take more than you can and then come back and get more of it. So when you get funding for big investments or purchases from a term loan, you can allocate your remaining cash for short-term operational expenses and emergencies. So kind of thinking about it backwards from the short term to the long term, if you start with something more long term, then you use it however you need to for those bigger projects. And then you say, hey, whatever I have in reserve here, or I've planned already to use this for a few operational expenses, to hire a couple more people on, to bring on a little bit more inventory that I'm not too sure about how it's going to help me with profits, but I'm testing something new. I have a little marketing plan where I'm going to budget an extra 2 to 3,000, and I'm going to put the rest of that 10 to 20,000 into that. That's a direction you then want to go into. So set payment structure, you know what you're getting out. As I spoke a little bit about variables and fixed, usually they're fixed. And also they could be variable if it's hard for us to see your details and go, well, you have too many fluctuations. We can't trust what you're doing, and we don't know this and this, and the projection of the market is why they give you a variable interest. And in today's market, we can kind of see more or less what's happening in each and every industry, so we're more prepared for it, but we may not know what happens thereafter in 6 to 12 months. We may be projecting something that may not be exactly what it is. So they may be offering you a variable depending on your funding details as well as your interest in your industry specific and so much more. So it's a simple, streamlined application process. Applying for an online term loan, it's very fast and straightforward. You can fill out an application in minutes from the comfort of your own couch, and usually you can hear back in a few days. So on that subject, you will usually be given an online application. There can be a PDF format. We can do and/or, depends on the lenders, depends on the brokerage. But a lot of the times it's an online application, and usually where I send you to, it's safe and secure. So you don't have to worry about if I upload my information, I have to link my banking account, because a lot of businesses don't want to do all that, and I get it. But it's very safe and secure when you come through me, and we can see it on our back end. There will be a lot of times I can ask for it, and a lot of the times we can see it on our back end when you submit it through the application process. So just expect that to be something nowadays with these fintech companies. Business advantages is another bullet point that I put together here. So the interest on a term loan, it's tax deductible in most cases. That's a plus. I'm sure you're happy to hear that. So you can save money when it comes to tax season. Plus, making the repayments on time can boost your business credit score, helping you score future financing opportunities at lower interest rates. So the flexibility of when you just start with an unsecured term loan doesn't mean you have to be with it forever. It can mean, oh, well, then I jumped into the SBA 7A loan product. Oh, no. And then I got this one. And then now I have a fourth option. Wow. So many doors open up when you look at this. And when I said business credit score, it is important to have business credit established. How much you have of it is another question, and it can be industry specific. You don't have to have a whole lot of it. Paydex scales, and when we're talking about FICO SPSS scores, and on a range from 0 to 100 or 0 to 300, excuse me, in a few of these instances, just having business credit established, being set up with Dun & Bradstreet, Equifax, Experian, etc., and being together with the Business Credit Bureau. Sorry, I had something on my keyboard there. And being established, not all will report to all business credits. Maybe it'll report to one of the three, two of the three, three of the three. So you just have to understand which lender you're going with. And it doesn't matter if it reports to all. What it matters too is, one, you're helping build your business credit. And at the same time, you're getting the funds you can use, and you don't have to stress out. You can finally take some time away from your own business to go on that vacation of yours, to be more stress-free. Honestly, I've been there, and I know it feels so good when you don't have to worry about, I need 100,000 tomorrow. I'm on my last day of my vacation, or this is what I've been thinking about all weekend and week. I didn't even get to spend my consciousness and my subconscious with my family and friends or whoever I was with, because I was worried about what was happening in my business. You can take some time away from that finally. Now, let me continue with this, and I'll get into the share screen in a moment. So there are some advantages to that. So you're not sacrificing equity. This is another point that I want to make. And it's a form of debt financing. So you don't have to worry about putting up any kind of collateral. What can you use a term loan for? Let me get into that now. And I put quite a few. Some of these you might have not been heard from other people. So it's very important that you keep tuning into this. So they're great to invest, again, in big purchases and long-term business growth. Remember what I said earlier. There are cash advance products, merchant cash advances, hybrids, where they'll usually have between 3 to 12 months. And then they can have a product where it's like 3 to 24 months. But once you get into the 12 to 24 month frame, you're looking at more of an intermediate product. It could be classified, quote unquote, more short-term, 1 to 2 years, etc. But again, what it comes down to is, what are you using these funds for? Well, I'm going to have a project that I'm going to finish in 4 months. Why do I need a year? Just because I want to lower my repayment, even if you qualified for it? So the funds have to make sense. So you may not even qualify for a year plus, but when I ask you, well, if you were to know what your return on your investment is here in the immediate future, how many months do you think that would be? I would say about 7 months. I need to at least gain a profit from this, or at least to get my revenue from about 30 to about 50,000 in the next 3 months. But thereafter, I should be smooth sailing. Or it's a seasonality thing, or you just need funding for it for operational expenses. I need a new tire. Well, why are we going to give you 2 years for a new tire on your truck? Doesn't make sense. Oh, because I wanted a low repayment. And no, it doesn't work that way. So you have to understand what the use of your funds are for, and it's all different. So long repayment periods and typically lower interest rates than credit cards, by far, in a lot of cases. I know I've racked up a lot of that with interest, and I don't use that as much because I don't have to. I'm at a phase where I've gone to, and I can limit my amount of funding and how I use my credit cards responsibly. So they give you an ample amount of time to generate a return on your investment before you have to pay off your loan. So you can use this term loan for, very common, and I have a lot of people right now who are doing this, opening a second location. So if you have one practice, let's say in the medical field, and it can be anywhere, and I need to go to get another building, maybe you already have rights to that building, it's underneath an LLC, You can go on forever about this. And you have a C Corp underneath this business entity. This owns the property. All right, that's a whole other topic and another matter. But you're opening up a second location. You have the building. You just have to go in there, get the employees. You have to get everything set up. And this perhaps is taking you about a year, or it's taking you about 15 months to get it all together. Well, do you qualify? 1, 2, what am I use of funds for? Great. Yeah, that makes sense why we would want to fund you for that amount of time. Now, how do we move forward with it? Expand or remodel your property, hire more employees, buying a new building or an office space, and so many more spaces. It could be a part of a commercial building. Purchase equipment, machinery, or software, cover upfront projects or inventory costs, and then refinancing your debt. So you can use a combination for these. It doesn't have to be just one and you're stuck to it. And there are a lot more reasons. You can use your funding for inventory, is one that I didn't name. Certain purchases of equipment, where you don't want to equipment lease, you don't want to rent it, you don't want to buy it all off. You want to figure out how to do it a different way. And there are many more reasons. I can be here for hours talking about what those are, but let's just save us the time. So some term loan examples. I'm going to skip a little bit of this. I may come back to this. But just a quick one. If you were an individual who got a term loan between 1 to 2 years, typically the sweet spot for an unsecured term loan, and yes, there are 2 to 10, especially if we're talking about the SBA 7(a) product. Maybe it's secured with collateral. And then there are other unsecured term loans where you can get in with like somewhere between a 500 credit score. But just know, if you get in with the lower credit than what's needed, usually we want you to have a higher credit and good enough revenue, that if you have low credit, you're not getting access to the A-tier lenders. You're getting access to B, C, D plus lenders. And these mean they won't usually get you the amount of funding that you can maximize on that you would have gone with an A-tier lender. They won't give you the best terms. They may not even give you the 1 to 2 years. They'll say, I'm going to give you 11 to 10 months, 10 to 11 months. And you'll actually have to go through this product first, and this is going to be a higher repayment. So just understand that with lesser funding details, you put yourself at a huge risk. And that's just how these work. Higher risk profiles get lesser interest, get higher interest rates, and then get the lesser of the terms and so much more. So that's just how this works. This isn't the EIDL loans. This is not how you should be programmed to approach these. And again, I've said this time and time again, the EIDL loans have programmed so many people in the wrong ways, and so many people only know about that. So when they look at it and then look at another option, they go, oh, too much interest. Like I spoke to a business owner today, and I told them about the interest rate for an unsecured term loan, about 24 to 36%. And they're like, oh, no. And it is, yeah, for them, it may be a little much. Well, let's see, can we qualify you for an SBA 7(a) loan, where perhaps we can get you 5 to 9% interest rates, and this is what we need from you. Okay, all of this I have. Boom, I can show this profit. I can show my credit being good and minimal inquiries. This is what this is. And then we can see how much you can get. And then you have to supply this documentation. Are you patient enough? And if you didn't qualify for the term loan, for the SBA, and we qualified you for a term loan, a line of credit, and a cash advance, or would that be a possibility to take in the meantime and use it however you would like to? Well, no, I qualify with my bank. Well, if we talked about that already, that's where I would have started. Now, someone here, let's say, for example, you're trying to get a term loan and you qualify somewhere between 1 to 2 years for inventory and production expenses. So operational and inventory. And it's also an expansion growth scenario here. So this inventory could be helping you open up more revenue, and then doing it in a little longer time with your return on your investment. It may be an immediate one, but you're going to get your higher return on that investment a little bit later. So freeing up cash flow is another one. So I'm going to quickly just go through this. You're developing a new product. That's a big scenario that I get a lot of the times, where it's going to be something that happens in about 2+ years in a lot of cases, somewhere even a little less than that. Marketing, perhaps it's a big project that you need to seek out funds for. I'm going to need 12, 13 months for this full project. So, okay, let's see, can we even approve you for 1 to 2 years, if not more? And if you didn't get approved for that, if we approve you for just like about 8 months, what can you do with that? And you shouldn't just say, well, I didn't get everything I wanted, I didn't get the terms. No, not the way to look at these. You have short-term, intermediate, or medium, as I like to call them, long-term business loans. Long-terms are more of like the SBAs and so forth. Usually the sweet spot for working capital SBA loans can be somewhere between 5 to about 7 years, in some cases up to 10 years. When you get beyond that, it can usually be sometimes purchasing a new business. It can be for certain equipment, and usually up to 25, it's more of the real estate, purchasing real estate property. So secure versus term loans, I covered that section. Fixed versus variable interest rates. How to decide if a term loan option is right for you. What do you need the funding for? You have to ask yourself, and I do that every single day. People will fill out my questionnaire, and I'll ask you, what are these funds being used for? And I have an additional note section. Be more specific. Let me know. If you need money for costly purchase or growth projects with a big ROI potential, then a term loan could help you. However, if you need to cover those ongoing operational expenses, payroll, debt, or pay for small expenses, that's also going to help produce to you you're in growth and expansion within 3 to 12 months in a lot of these cases, you might want to consider another type of financing, perhaps like a line of credit, a cash advance, a merchant cash advance. What's the payoff? You have to understand, what will getting this funding do? How will it not only get a return on my investment, but when it happens, what will then happen after that? What is going to happen when you bring on new revenue, when you bring on new customers? Maybe it's repeatable customers. You got to crunch these numbers to estimate this potential return on that investment. What do your business finances look like? Will you be able to pay back the loan on time and in full if your business is already in the red financially and that's like you're just trying to stay up afloat? Getting a term loan can set you back a lot. What you don't want to use a term loan for if you're a startup or a new business. And I'm going to leave startup funding options down below like always. So make sure you guys check out those options. I have a lot of them for you, especially one of those being 401k IRA financing. A lot of people take advantage of. So it should enhance your business operations without placing you under pressure on cash flow. You can even use it to bridge cash flow gaps like a lot of people do with invoice factoring. And that's another option you can explore. I have content on that. A term loan maybe not for you if you're just trying to stay up afloat. You're not generating significant revenue, so it wouldn't be helpful to take one. Now, if your projections are like, well, I'm doing 70,000, 80, 90, 100, boom, you're growing. Well, that's significantly. It may not be in like 1 month, but you're significantly growing, and so it makes us feel more reassured when I speak to my lenders and my underwriters, and I hear, "Hey, Jimmy, we couldn't get him a 4-month loan. We couldn't give them a 24-month loan because of this." It's industry specific. They're fluctuating in the last 2 to 3 months out of the 6 months of bank statements. Usually we will look for. A lot of the times this can be about 6 months we'll look for in bank statements, 6 months to 12 months, sometimes 3 to 6 months. But just expect that, and we want to make sure everything looks good. So a key component of what the lender's underwriting process is analyzing is your business's financials to verify that your cash brings in what it will be able to support to loan repayments. And I won't get into like how we calculate that in this video. I think I came out with one. Yeah, I did come out with one the other day in another video of mine. Usually 1 to 2 years is what you'll see. Lenders won't be as confident in your ability to manage and guide your business's growth. So if you have less than 2 years, nobody's going to want to give you 1 to 2 years and above. Your business is still fighting. Like it takes about 5 years fully, not even 2 years, where I consider established 5 years to finally say, hey, I've hit through that ceiling. And a lot of you who are watching here can probably relate with me, and you would say yes to this. Maybe in the beginning you wouldn't, but now you're seeing it. If you have that amount of time in business, you're going, yeah, it took me like 6 years for me to finally plant my feet on the ground, and everything is stable. Like I'm not losing employees. I'm not having a battle with growth and expansion. I have set processes and systems. I can automate this, and it's a big operation that I have running. I have contracts in place. I'm not just losing them. I have a consumer base, whether I'm doing B2B, B2C, however you look at it. So if you have poor credit is another one that I wouldn't go in this direction. And again, be very careful of who you turn to, because a lot of people out there will just give you the bare minimum of what you want to know. They're over-promising and under-delivering. I see it too many times. So if you're not certain about your ROI potential, I would even say to this degree, don't get an unsecured term loan. But 2, because you're paying more towards the interest, and it can hurt you more than it helps you. That's why I prefer these other products where maybe you could just get it to 10 months instead of 15 months. And your funds make sense for you to use it in 10 months because you're going to get a return on your investment in about 9 to an 11-month time frame. So why should you take 15 months? Just because you want a lower repayment does not make sense in a lot of cases. Wouldn't make sense to you, and wouldn't make sense to me. And I said it the opposite way. But if you're not certain about your ROI, they're not the best option for short-term funding needs and investments with minimum ROI potential. So if you see it as a way to just cover cash flow or just a cash crunch, may not be the best for you. So let me see if I'm going to jump on the share screen in a moment. But I said this earlier, you have to have at least 2 years in business, a 660 and above FICO. And in some cases, we can get you in with at least a little bit under 660. But credit is, that's what we're looking at. And we can get you in usually if you have higher revenue. So if it's revenue based, we're like, you have 650, but you're doing like 300,000 consistently doing it. It's like, well, You have 3+ years or 20+ years in business. Okay, well, I mean, we can factor that in. We would like to see a 660 and above, and there may be some things in your credit at a 650 that then would say, "Hey, sorry, we can't get you this business term loan because you have too many things in your credit report that are showing up that are not going to be as helpful." So 660 FICO, at least 2 years operating, and at least 300,000 annually, and at least 20 and or 25,000 you're depositing in your business checking account. So I'm going to get into a share screen here in a moment. Let me see if I missed anything though. Okay, let me jump into the share screen and then we'll wrap up here. Want to make sure I have the right tab open. And again, all this information will be down below in the description for you, as well as that questionnaire if you need help. Just want to make sure I'm finding the right page here. Okay, so on a side note, let me move over to this. See if I can open up the share screen on this page. Yes, do this. Okay. So this is only with one company, but you have a company named National Business Capital, where you can go and get this unsecured term loan and even in a secured term loan option, up to 2.5 million. Obviously, when you're offering up collateral, you can get up towards that amount. And if it's unsecured, it could be a little bit less, but you get a same-day decision, firm approvals, digital application, and online checkout. There are no prepayment penalties. Monthly payments are available. These report to the business credit bureaus, depending on which ones, through which lenders. Consolidate up to 2 loans. I know there's a minimum there, but that can also be for securing it with collateral, but more deposits you see there. At least 2 years would be sufficient in a 660 and above FICO. Approval, competitive rates, terms up to the amount you see there, 10. Early payoff discount. So when we get into the 10-year frame, we're talking more of a secured term loan product, not so much of the unsecured. And then there's also the business cash advances, and those are a few other options, secured business lines of credits. But I want to then turn your attention to another section here. Let me see if I can open this. You have business lines of credit, business advances, the business term loan product, which we already just spoke about. The 1 to 2 year sweet spot is usually what we want to see. No bankruptcies, liens, or foreclosures in the last 3 years. That will hurt you. I have a lot of people right now who are speaking to me and they can't pass because of these issues, one or more. Bankruptcies I just closed, had a foreclosure, had a lien, and so forth. So you want to get clear of that. And then we also have the SBA loan options that you can explore. And now I'm going to jump into a different share screen here. And again, this is with National Business Capital if you do qualify. And there are a few other resources if you've heard me speaking about other companies. I'm going to link you to them down below in the description. You may have heard of a few with DAC and a few other companies I'm associated with, directly and indirectly. Direct lenders, and there's also indirect lenders through brokerages. So this isn't the only place to go to. This is just the one that you're seeing right now. And another one of their great products that they offer, let me switch screens now that you see that. There's a video and a review that I did for them down below in the description if you guys want to learn more about them. Oops, let's do this. There it is. So there's this hybrid SBA 7A loan option, and I'm going to conclude with this. One is an unsecured financing product, a term loan, a line of credit, or a cash advance, which we can easily fund you, which can be funded easily, and quickly. The other loan is a 10-year SBA term loan, which can get a letter of intent within a couple of days, but takes usually 6 to 8 weeks for you to actually receive your funds. Our SBA loan can go up to $5 million. A business needs to be generating at least $120K a year in gross revenue a 660 and above plus FICO. In addition, we need to see the 3 most recent business tax returns and 3 most recent years and year personal and year-to-date financial statements with a little bit more. The SBA goes primarily off of credit score and profitability of your business. Some documents that I would need from you on this hybrid SBA 7A loan, excuse me, the 2021 business bank statements. This is what I would need since we're in 2022. If it were 2023, then it'd be according to 2022 usually. 2020 and 2021 profit and loss balance sheet, year-to-date in profit and loss and balance sheet, at least through Q1, your previous 3 years of business and personal tax returns, your aging AR and AP reports. Sometimes you may not have this. I would recommend you do, but your business and your industry might not allow it to, so we can kind of get by with this. In a business debt schedule, you don't always have to have it, but I would honestly recommend you do. Every single industry should have a business debt schedule and put it together. If you need help understanding some examples, some templates, I can send that your way. And then application sent via HelloSign, and I can send you all this information. And if this is the right fit for you, I'll go through it. And again, we can evaluate you for some of those other options. What you don't see here is that it is very heavy on credit. So you have to have clean credit, low inquiries, minimal credit utilization. Your ratio needs to be low enough, debt to income low, and nothing outstanding on your credit reports, like late payments you haven't taken care of, and talking about liens, foreclosures. All these different aspects go into play to determining if you can even get an approval for it. So if you already have these, but this is what you're fixated on, let's save each other the energy and time of having to go through all that trouble, putting myself, the underwriters, and our lenders if you don't think you would qualify. So that is that option. And then I'm going to actually conclude with one last thing here. I think I'm looking through my tabs. Give me one moment. Okay, now I'm going to transition to this so I can show you my form. All right, perhaps you've seen this already, so just stick with me. But this is a questionnaire you can fill out on my site. It is Viral Funding Solutions, and I'll leave my site down below. But this is the fastest way to get a hold of me. You can ask anybody else. Everybody wants a phone call. I can't get on a call with everybody every single day. If I did, I'd probably be on 300 to 5,000 phone calls. I'm not even joking you. My brand has been growing for quite some time, and it wouldn't be where it is if it wasn't for you guys. So I greatly appreciate each and every one of you being able to share my content. And I care about you first and foremost. Business really comes second. There have been a lot of the times where I'll forget we're even talking about business funding because I got to know a little bit about you. It depends on how much. You don't have to open up so much. I'm an introvert, so I know how hard it is to gain trust and have somebody that I know I can be like, no, it takes about 7 to 10 times for me to trust you. And even when I trust you, I don't know. But I get that. And so with this questionnaire you're going to see seen right here on your screen, you're going to get a personalized and customized email response for your best funding option and options. Plus, you'll get a free 6-step pre-approval lending checklist to get you approved for funding much faster. So without wasting time, we're talking about days, weeks, months, and even years of sifting through old, outdated information, stuff that just doesn't work in today's marketplace and what will be working later on, stuff that is full of fluff and theory, people that just want you to bait and switch you. They charge you for some application fees that are not legitimate. They're scams, or people who under-deliver for you. And it's just very bad out there because there are a lot of people who do not know what they're doing. They're just trying to do it for a commission. That's not what I'm here for. Honestly, that's not what I'm here for. I know this is a business, but at the same time, I'm here for you. I'm here to say, hey, how are you, Sally? How are you doing? Oh, yeah? You guys are going to the playground later, hanging out? Cool. Yeah, no, that should be fun. Some good family time together, and for you to get away from the everyday insanity of work and all these things. So I already forgot we were talking. I honestly forgot we were here on this live talking about business funding. Unless I saw this video, I would have completely forgot about all of that. But you see how I approach this, and I very much do care. You're not a number to me. Some people will say just a number, like that sounds like it's any better. You're not a number to me. You're more. You're a human who has feelings, who has thoughts, who has feedback, who has a family to take care of, people that you love and care about. And you shouldn't be treated as just, hey, a commission. No, hey, I'm going to send them this way. It's not the best program for them, but because I'm going to make 7 points on this. No, that's not what I do at all. It has to be in the best interest for you. So it'll look like this more or less. You can fill it out literally in less than 30 seconds. It should be done. And it could change the way it looks, but it'll be down below in the description for you. And just some parting thoughts here. If you guys learned anything, if you got value out of this video, I would greatly appreciate it if you give me a like. If you can share this with somebody who you feel will get value out of it, it can be a complete stranger, your friend and or family. You just know at the end of the day, you were able to provide goosebumps, make somebody feel that sensation that, holy crap, I couldn't even find this information if I wanted to. But because you referred me to it, now I have an education on why I didn't get approved for an SBA EIDL. Why wouldn't I get approved for an SBA 7A loan? Why can I not even get an unsecured term loan? Well, oh, this is what I can do to drop my interest. So I can offer up equity, collateral, real estate equipment. So when usually you're offering up collateral with a secured term loan, usually we're looking at that with accounts receivables in a lot of cases. That's what we want to take, and even with the secured lines of credits. So accounts receivables are very much a big factor. And then there's also asset-based funding with real estate and or equipment. We also have inventory financing, which I have quite a few people right now that are going through, and then a few other programs that are available. And there's so much, not only with National Business Capital, but with a few other companies that you've probably heard of me speaking about. Everybody has a different direction. They may offer a similar product here as a different lender, but I prefer this lender you go through because this is a hybrid cash advance where we're not having to just look at credit and even debit card receivables. We're not basing it off of those. Are you taking credit cards and debit cards? It's more than just credit and debit cards. That's why it's a hybrid. And we can look at every other part like cash, ACH, checks, whatever's all putting into your account with credit cards and debit and so much more. So we spoke about the differences between the EIDL and the unsecured term loan. And I told you how there are many more options that I'll link you to down below. Look at that form to fill out. But the differences is COVID funding, growth and expansion primarily is what you should be seeking. Those projects, those larger projects with an unsecured term loan with bigger equipment, bigger inventory, another building that's going to produce to you an ROI, not necessarily in about 3 to 12 months or fully. It can be somewhere between 15, 12 to 24 months, even sometimes thereafter. But don't bite off more than you can chew. Just because you want 100 million doesn't mean you're getting it. If you're doing only 10,000 a month, you only get approved between 10 to 15% of your annual gross sales, your annual revenue, and on average 10 to 12%. So why are you fighting to get a million if you're only doing 20, 30, 50,000? That's going to be harder to ask for unless you have property that's equivalent or accounts receivables, etc., to the amount you're seeking. Do you have 1.5 million in a property that we can take equity out of, or a complete property to give up? No. Well, you're looking for a 1 to 2 year term loan where the ROI is not going to be in about 1 to 2 months. You're going to, in 1 to 2 years or 2+ years, you're going to finish this project in about 7 months. You're just getting a tire. You're getting a new van. That's only going to be something you need for 6 months on a return on your investment. Why are you wanting a year to 2 years? So there are a lot of these things. And then some of the similarities is it's a lump sum you're getting. Okay, so that's kind of the way to look at it. Difference, government, non-government in a lot of these cases, private lenders, they're taking a lot of the risk. Interest rates lower, a little bit higher here because they're private lending options. You're not putting up collateral. If you're putting up collateral, then we're talking about prime rates plus 2 to 6%. And in today's market, about 4.75% plus 2 to 6%, you're breaching over 10% at the maximum. You're getting into those early, if not late teens. So even if you were 15% and under, 15% between 4 to 15%, if you were about 10% with collateral, that's a bargain in today's market. Don't just be fearful because of the interest rates. And right now is the best time to get in. Don't wait too long. You can see what's happening with price elasticity, economies of scale. I took microeconomics and macro. I studied business. I studied all the sciences. So I know what's happening in today's markets. I go to the meetings. I go to the conferences. I know what the lenders and the best underwriters are looking for. I know exactly what to share with you. And even when I don't get it from them, I know what's happening because I'm on top of every single thing that's happening in every industry. And so right now, get funding if you can. before you wait too long, and there could be some reserves, but they won't be offering you as much because the banks are not offering a lot of these lenders get their money from the banks, and there's a lot of reserves, limited reserves in the banks because of the current state. And so they're trying to be protective of who they give this money to. And if let's say you're in construction and you would have received 150,000 for something you have now or have but we're giving you only 80,000 because your field and the economy, etc. So you have to understand what you're getting yourself into, and work on protecting your personal credit as well as your business credit. I'll be jumping on business credit a little bit more. If you've emailed me, just know that I've possibly seen it. I just haven't had a time to respond back to it. There's a lot. And so I'll do my best to respond back to you here as soon as possible. And kiss, kiss. Appreciate you for commenting too. And I will help you out. Feel free to send me an email. If you haven't filled out that questionnaire form, please go ahead and do so. And at any moment in time, make sure to get started in the description. And again, I know I'm reiterating points here, but just so you know, comment section is there. Be careful if you see spammy comments, they're not coming from me. Be careful who you say yes to. Don't speak to them a lot of these times. It might be somebody legitimate that you might want to jump on a conversation with in the thread, not exactly reaching out to them. Be careful. And then we will go from there. Let me make sure I didn't miss anything. One last check. Let me look over this. Oh, yeah. And I made another video on merchant cash advances versus unsecured term loans and the length, duration. And I gave you guys an example. If you were given 18 months with the term loan and then you were given 18 months with a cash advance, the 18 months, you're probably given 25%, but in the term loan, you're probably paying 36% interest. Think about it. It might be an interest thing, but it might be also be your repayment, and it could also be the use of your funds. So some people would rather take the cash advance. They can get done early. They can get more benefits from that as opposed to paying more towards the interest. So I'll try to leave you that video down below. And as always, appreciate you all for tuning in. I'm a bit tired, as you may already know. And I will talk to you all soon. Take care.